On this episode of After Earnings, we have e.l.f, the beauty brand having a high-profile year with the billion-dollar acquisition of Rhode, Hailey Bieber skincare brand, and a look towards aggressive international expansion. Today, I'm delighted to be joined by Mandy Fields, e.l.f.'s Chief Financial Officer, to discuss the company's growth strategy, the impact of tariffs, and what it means to have celebrities in the mix. Mandy, thank you so much for joining us. There's a ton to get through, but wanted to start on something a bit more tactical, because we're living in a moment where public companies are getting a lot of focus on their branding. We've seen that recently, whether it's American Eagle or Cracker Barrel, and e.l.f. is really famous for its nuts and bolts approach to building engagement and building audience in a very entrepreneurial fashion. Talk to us about the marketing strategy and funding it right now.
Well, Anne, first of all, thank you so much for having me. It's a pleasure to be here. Marketing is really at the center of everything that we do. It has helped us to stand out as a brand. You know, when I came in to this company 7 years ago, we were only spending about 7% of our net sales behind marketing and digital. And today, that ranges from 24 to 26% of net sales. So it's certainly an investment area, an area that we're continuing to see high ROIs behind. And so really support Corey and the team in what they're doing from a marketing standpoint. And really our goal is to delight and entertain our community. And that's what we set out to do with all of our campaigns, and are very pleased with what we're seeing there.
Now, one of the ways in which brands try to get a higher return on their marketing investment, or at least bring down the cost, is to partner with individuals who have got huge followings and huge audiences already. Talk to us a bit about e.l.f. acquiring not just one celebrity brand. We've seen all the headlines recently on Rhode, but Alicia Keys is someone that you've partnered with as well. Talk to us about how these celebrity-focused brands are performing.
Well, I'll tell you that, we are very proud of the founders that we have in our portfolio of brands. In fact, we were just at the New York Stock Exchange 2 weeks ago and had all of our female founders there. We had Alicia Keys there, Hailey Bieber was there, Shirley and Dr. Renee from Well People were there. And it was just really an incredible moment, because we have created a platform where these founders feel that they can continue to push forward their vision that they have for their brands. And that is something very special that we're building with e.l.f. We like to say that we're building a different kind of beauty company, but really a different kind of company, period, where we embrace these founders, we support their vision, and we're really here to say, how can we help accelerate that growth behind your brands? And in fiscal 25, which ended for us in March of this year, all of our brands in our portfolio grew on a year-over-year basis. And so we're very proud of what we're building here at e.l.f., specifically with the founders still very much involved in everything that we do. So we really don't see it as a celebrity play. We see it as these founders being dedicated to these brands as they move forward.
And give us an example of that, Mandy. Let's dig a little bit into Keys Soul Care, which is the brand that you partnered with Alicia Keys on. You said it grew, all of your brands did. But in terms of looking at the marketing spend for a brand like that compared to another that doesn't have a famous face presenting it to the outside world, what do those differences in marketing spend look like, if any?
Well, there's really no difference from a marketing spend standpoint, because we target that 24 to 26% range at a total e.l.f. beauty level. And so how that allocates to different brands might be different, but we're really focused on what are we spending from an e.l.f. beauty level, where are we getting those highest returns, and that really dictates where we're spending our marketing dollars.
So where are you getting the highest returns right now, Mandy?
So, when we look at the brand that is the largest in our portfolio, it's going to be e.l.f. Cosmetics, e.l.f. Skin. And so that will continue to drive those high ROIs for us, because there's just such bigger awareness behind those brands versus what we're building with Naturium. And I failed to mention Susan Yara and that female founder cohort, but that brand continues to do very well. Launched in Ulta last year, has done tremendously well, in addition to the other brands that we have in our portfolio. So, that marketing spend, it really is focused on how best to connect with the community, what's going to resonate the most. In fact, Naturium, just in this past month, just did their first awareness building campaign. And so that was really great to see come to life, and they're finding their own voice and really going after the opportunity to increase the audience behind that brand as well.
Talk to us about the growth strategy, both for e.l.f. as a whole, Mandy, and then also give us one or two stories about, a particular brand or a particular category that you're all leaning into, perhaps more aggressively than others?
Yeah, so our growth strategy is really anchored on three things. One is to become the number one brand in color cosmetics. Number two is to continue to penetrate skincare as a new category, and we've done that with e.l.f. Skin. We accelerated that with the acquisition of Naturium 2 years ago, and I think we've even further gone into that direction with the recent acquisition of Rhode. And so skincare is a very important area and category that we're focused on. And then number three, I would say internationally. Less than roughly 20% of our sales is outside of the U.S. today. You compare that to other competitors in beauty where more than half of their sales are outside of the U.S. And so that illustrates the tremendous opportunity for us to continue to expand globally. And on the category question, I mean, I think skincare is a great example of that. Before the acquisition of Naturium, about 9% of our sales were in skincare. The acquisition of Naturium doubled that penetration in skincare. And so, and we continue to push forward there. And what we loved about Naturium is not only did they have the facial skincare side of the house, but they also had body care.
Yeah.
And so that's a new category for us that they're seeing tremendous progress in. And then you layer on top Rhode, which has, Hailey's philosophy of one of everything really great in that portfolio. And so you have the skincare, but then you also have a little bit of hybrids with like a lip peptide treatment or the glazing milk that people just kind of use as a natural glow up to their skin. And so we're very pleased with what we're seeing on the skincare side as well.
Mandy, it's so fascinating because when you lay this out, you've talked about different parts of the beauty space where depending on which company you look at, depending on which distribution channel you look at, depending on which geography you look at, the story about the health of the consumer is quite different, right? There's one school of thought that color cosmetics has been quite a difficult place for brands to play. There's another that said skincare still got great opportunity, particularly high performance, but it's perhaps getting a little bit more saturated. When you look at the portfolio of brands you have, how much are your customers, at least right now, very distinct consumer bases versus how much crossover are you seeing? Are you seeing any trends that help you think about a way that you can cross-pollinate traffic from one to the other?
Yeah. So one, I will say on the category congestion, I mean, there's over 1,900 brands tracked by Nielsen in color cosmetics and skincare. So there are a lot of brands out there. We believe that we do have a distinct portfolio of brands and distinct from one another, whether that be from a price point perspective. If you think about e.l.f., e.l.f. is going to be at the more value tier price point at around $7 on average. You have Naturium then that steps it up a little bit more, around $18 on average. And then you have Rhode that takes us into entry-level prestige. And so definitely differentiated from a accessibility, from price point standpoint, but all accessible in their own right, because that's important to us at e.l.f. And then I would say from a demographic standpoint, the thing that is really unique about Naturium is almost 40% of their users are male. And so that is something that is very differentiated from the other brands that we have in our portfolio. And then you kind of have e.l.f. and Rhode kind of speaking to a younger demographic, but in different ways, and both have connection with community that is super important. And so I think that they're both stand on their own right. Naturium certainly stands in its own right with that male audience, more millennial, Gen X users of that brand. And so very differentiated across the brands that we have.
And just given that differentiation, Mandy, let's go back to the long-term growth strategy that you've touched on, but really dig into it. How is the strategy different for each? Are some of those brands more ripe for international expansion than others? Talk to us about how you assess each of those brands individually or together and figure out where to put the dollars behind them.
Well, we have a strong portfolio of brands, and I think all of our brands are ripe for international expansion. When I think about e.l.f., we have, our community is asking for us in countries that we're not even in yet. When we launched with Douglas in Italy, we took our portfolio as it was here in the U.S., took that forward. They told us, hey, people don't wear primer here in Italy. You don't put that on the shelf, don't include that in the assortment. Well, in fact, our Power Grip Primer is the number one item in Italy in the Douglas stores. And so, we've got a great recipe for how to go to market and generating that consumer demand before we get into the country has been very important. And I think that, as we continue to expand internationally, that's going to be kind of a roadmap for us. Where are consumers already asking for our brand? Marrying that up with countries that have retailers that have this expansive footprint. Rossmann in Germany is a great example of that. They had a huge retail fleet in Germany, but then also have presence in Poland, which we'll be going to Rossmann in Poland as well, which we talked about. And so just leveraging that community demand, but also partnering with the right retailers in these countries is going to continue to take us forward. And I see that same opportunity with Naturium. We just talked about them going to launch in Sephora, Australia. Sephora is a great partner to rhode as well. And so I could certainly see that opening up doors globally for rhode, Naturium, as well as e.l.f. We launched in Sephora, Mexico last year, seeing great success there. And we just talked about launching in the GCC countries in the Middle East with Sephora. And so all of those things continue to open up opportunities for us, but it's really rooted in our community is asking for our brands all across the world. And it's just how fast can we get there and expand our presence in those countries.
Let's talk about Sephora in the US just a little bit more, Mandy. Early in September, Sephora is now going to distribute rhode, which is very exciting.
Yes.
So that evolution from direct to consumer to going into shelves. Talk to us about the cost of pursuing that kind of retail strategy. I've been in the industry a little bit. It's not cheap to go on the shelves of Sephora when you're a brand. Talk to us about that.
Well, I'll tell you, rhode has done an incredible job. Hailey, Nick Vlahos, Lauren, Michael Ratner, that team has done an incredible job of not only creating a brand that had a tremendous sales growth, but also was profitable.
Yeah.
And so we've talked about wanting to invest behind that brand, whether it be through marketing or as it expands into Sephora, that was also an investment. But even with those investments, we expect that brand to continue to be accretive to our EBITDA margins, which is incredible. And so I would say there was room there to make that investment to launch in Sephora. And we are so pleased with the launch in Sephora. Launched in all US and Canadian doors on September 4th. And it blew everybody's expectations out of the water. And so very pleased with what we're seeing there.
Expectations were high, Mandy. Let's talk a bit more about the terms of the deal. $600 million in cash up front, $200 million in e.l.f. shares as part of the consideration, and then another $200 million as an earnout that's held back for those listening and paid out to the team over time, subject to hitting certain performance milestones.
That's correct.
Some folks in the market, some analysts said, this is a big price. The brand's done unbelievably well. You can't dispute the growth and the fact it's been profitable growth. But nevertheless, $1 billion means there's big expectations on execution. Sephora is one of those execution levers. What are the others for rhode?
Well, as you mentioned, rhode had tremendous growth even before launching in Sephora. So over a 3-year period, they had built that brand to over $200 million in sales on their own D2C channel. And we see a lot of brands come through, and we see a lot of brands in beauty, and we've not seen anyone really reach that level of sales volume through a DTC channel in such a short amount of time. And they did it with just 10 products. So there's variations at the SKU level, but just 10 products. So it's really incredibly productive brand that they've created. And so the launch into Sephora, yes, that's one growth lever. And remember, Sephora is the world's largest beauty retailer. And so that's a great partner to have as we launched in all doors. And I think it's a testament to the brand that Sephora will usually test you in a handful of stores before rolling out into the broader market. But with rhode, they said, we're going to go big. We're going to go all US and Canada at one time. We talked about launching in the UK later this year with Sephora as well. And so there's a lot of growth opportunity, I think, with Sephora before we even start to think about other channels to play in. And so really pleased that we have that partnership, and both sides are very much dedicated to seeing the success of this brand.
I'm going to ask you a slightly provocative question, Mandy, and it's not for the sake of being provocative. It is actually stemming from having seen that celebrity-founded brands have had mixed outcomes. Some have been phenomenally successful. Others have struggled where the founding partner, where the celebrity has decided that perhaps they don't want to continue on as the face of the brand, where they feel that it's perhaps deviated from the vision they laid out at the beginning, even with the best of intentions when they get acquired. How do you feel about what e.l.f. is able to do to mitigate that risk? Not just with rhode, but you partnered with some other famous people too, and perhaps you want to continue to do so in future. What are the mitigants that you can put in place so shareholders get comfortable?
Yeah. So really the difference with e.l.f. is that as we bring brands onto our platform, and I mentioned this a little bit earlier, we want to continue to see them grow. This is not a synergy play where we want to bring a brand on and we want to cut a bunch of costs and we want to put them in the e.l.f. machine and just add it, to our sales base. We actually want to nurture these brands. Our plan with rhode, our strategy with Naturium was the same, Well People the same. We want to let these brands continue to run. We will help you with investments. We'll help connect you with the right people. From a retailer standpoint, we helped rhode find field staff, and because we had those connections that we could bring to the table, and anything else that they need, we want to be here to help them accelerate the growth behind the brand. We don't want to detract from what they're doing. And so it's very much what we call a pull model. We want we want these founders to come to us when you need help. Otherwise, we're going to let you run, and we're going to be here to support you to continue to drive that growth. So a very different model, I think, than most companies that take these brands on, kind of put them in the machine, and then you don't have the founder as you move forward. This is Hailey's baby on rhode. I mean, she built this from the ground up, and she has no intention of saying, see you later. She is in this for the long term.
Let's switch gears a little bit and get into the numbers, Mandy. Let's talk a little bit about tariffs. As you sort of laid out earlier, about 80% of e.l.f.'s business is in the United States in terms of your top line today. But a large part of your cost structure does rely on China. Talk to us about the current state of play with tariffs. We know the US and China, ongoing negotiations. How are you thinking about your supply chain?
Yeah. So about 75% of our supply chain is still concentrated in China. If you were to rewind the clock maybe 5 years ago, 6 years ago, it was about 99% in China. And so we certainly have made progress over the past few years of diversifying our supply chain. And it's still very much as part of our tariff mitigation strategy. I think by the end of this fiscal year, we'll be less than that 75% of supply chain concentrated in China. So we're continuing to make progress on that front. But I'll tell you, there's 3 ways in which we are focused on mitigating tariffs. Number 1 was through pricing. So we took a price increase on August 1st. Across all of our items, $1 across all of our items globally. And so that is now in effect as a mitigation strategy on tariffs. Number 2 is the supply chain diversification. Like I said, we're making progress. We're working with existing suppliers and also finding new suppliers outside of China to work with to diversify our supply chain. And then number 3 is really what we're calling business diversification. So as we continue to expand outside of the U.S., those sales are not subject to tariffs. That volume is not subject to tariff. And so as we continue to diversify from an international standpoint, that also helps that cost mix and mitigates the impact of tariffs.
Can we just talk about that price increase some more? Because I remember when this broke, I was really intrigued to see how this would be received. So just to repeat, it was a $1 price increase. This was across the board. Whether something was originally priced $11 or $20, right, that $1 increase was a much bigger percent increase for some of your SKUs than for others. How have consumers reacted? This happened on August 1st. You have a little bit of time, a little bit of data. What's the reaction been?
Yeah, so we originally communicated the price increase to our community back in May, and we got a lot of positive feedback. Thank you so much for being transparent with us, not trying to pull the wool over our eyes. Appreciated the transparency. And so that was initial feedback from the community. Like you said, it's still early days on the pricing. Even though it went into effect August 1st, it takes some time to get fully reflected in the market.
How are you thinking in the seat of CFO of further acquisitions, buybacks, dividends, returns to shareholders. What are you thinking about doing with your war chest?
Yeah, so we very pleased with our cash position. One, we are going to continue to be focused on investing behind the growth in our brands and our portfolio of brands. One of the big things that we just went live with SAP on July 1st. And so that was a big investment that we had been using some cash to fund. And so that's super important, making sure you have the right infrastructure in place as you continue to grow globally and that you bring more brands onto the platform. You want to make sure you have that right infrastructure in place. But I would say just continuing to, maybe hold on to some of that cash so that you do have dry powder as things like that come up, and just making sure that we're continuing to invest behind the growth of our brands and the infrastructure that we need in place, whether that be from a technology standpoint or from an operations standpoint, making sure that we have what we need as we move forward.
And then coming up on those November earnings, Mandy, there is probably going to be some pressure to provide full year guidance for 2026, something that e.l.f. declined to do in the last quarter. What exactly would you need to be able to provide some kind of guidance to the market? What are the specific actions that you want to see in the macro or elsewhere to get you comfortable enough to give that specificity?
Yeah, so our decision not to provide guidance back in August was solely tied to tariffs. And so there was just still too much uncertainty. The week after we released, there was going to be more detail given on kind of what direction we were going to move in, if there was going to be another delay, if there was going to be higher tariffs. And so now that we have a little bit more visibility into where the year is going to shape up, the decision was made that to hold that tariff rate where it is, which is currently about 55% on our products through November. That decision has been made. I think we're going to be in a much better position to provide guidance on our November call, just given that we have more visibility now to the balance of the year, and a lot of the inventory that we're buying will be in a better position to make that call.
Mandy, when you're in this seat and you are in a period of uncertainty that is outside e.l.f.'s direct control, I'm very curious to know, what is the decision-making process for you? And it's a judgment call. Give no guidance. Say, if tariffs land between this level and that level, these are the range of outcomes. And the reason I ask this is is a bit broader. We've seen companies give no guidance and their share prices have been negatively impacted. We've got others give a range. We've got others say, look, our business, absent tariff impact, would look like this. Talk to me about how you landed on one versus some of the other communication options.
I'll tell you, Anne, there's a lot of scenario planning going on behind the scenes. I mean, we've looked at a range of outcomes, and what we've anchored to is that there's just too wide a range of outcomes. At one point in this year, we were paying 170% on tariffs. We started the year at a 25% level tariff, and now we're kind of in this middle at a 55%. So we did quantify, at the 55% level, what that means on an annualized basis to just give some perspective. But our guidance philosophy is really rooted in we want to be able to give visibility to both the top and the bottom line, because we had a lot of questions. Why not just give top line guidance? At least we could have had that. But we want to give a holistic picture, and we want to make sure that what we put out there is grounded in some certainty. And at that time in August, there was just too wide a range of outcomes. And I don't want to anchor at one point and then have to come back and say, oh, now things have changed, so I have to lower it. I don't want to be in that position. And so I think it's better to just be transparent with, hey, this at 55% level, this is the impact that you could see on an annualized basis. And we'll be back to you when there's a little bit more certainty on what that means for us for the year.
And then last question for you, Mandy, is about the money and the availability of it, as you've just clarified, to invest further into growth, but also into something that is changing, I think, a little bit in the beauty space, particularly here in the United States. It's become clear that non-beauty retailers are sort of reawakening themselves to the ability of beauty to drive traffic to their stores. Right? We just saw The Gap. I know you're in the Bay Area right now. The Gap local has announced that beauty is going to get back in a bigger way into stores, even though their sort of superpower is apparel. If you were to look ahead to 5 years from now, which do you think your distribution channels may be in the United States that perhaps look a little bit different from today?
Well, we have evolved over time, right? I think that, 3, 4 years ago, Amazon wasn't even really in the conversation from a beauty standpoint. And now they've made tremendous progress in that space. And I think it really comes down to convenience. You want to be where the consumer is shopping. And so the Gap must see an opportunity there to take some of that share out of the market. If consumers are shopping in the Gap, they want to take some of that beauty wallet as well. And so we'll see how things evolve. But I think from my perspective, it really comes down to convenience. Consumers want what they want right now as soon as they can have it.
Yeah.
And so whether that be at your traditional retail and drug channel is a convenience play. If you see more apparel players coming into the space, I think it's really going to come down to people just want to get what they want when they want it. And the more points of distribution out there, the more convenient that's going to be for the consumer.
Mandy, thank you so much for joining. Please do come back. I'm Anne Berry. Thanks for tuning in to After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends.